Well, I was having so much fun with CERN in part one that I decided we could actually have him back yet again. By the way, for anybody who has failed to see the bio, the hour and a half bio, we put it together. I put it all together as one complete bio and put that up Sunday night, so you can look back in the recordings on YouTube. And if you want to see it all at once, there it is in a tight package. You know that certain people were actually interested in your life. That it turns out.
It's shocking to me, Randy. It's also shocking to see my life condensed into 90 minutes. It's like, boy, has time gone by.
As time flies. Well, a 90-minute video would be like a 60-page book. So, there's a third of your if you decide to publish your memoirs, you can come back and just get a transcript and you're on the way.
Nothing else to say. I said it all in those 90 minutes.
All right. So, the other day, if people didn't see it, you probably want to go back and look because we had a fantastic conversation about aspects of robotaxi. But in the meantime, there is a part two, and I'm sitting here with bated breath.
Yeah, because you don't know what we're going to talk about. This is always fun, but you always seem to know what the next slide's going to be. So we'll see how that goes today. Yeah. All right. Let's start with this. You've seen this before.
Yeah, the disclaimer.
Yeah. So we'll just leave that there. That's covered. All right. Let's talk about something called Bitcoin.
Now, this is probably going to show on Friday night or Saturday morning. So but we're shooting this on Thursday when Bitcoin kind of blew out the all-time highs.
Yeah. And right now we're actually at a number higher than what I'm showing here, but today it did cross 111,111. So I decided to capture that on this chart.
Oh, that's great.
Yeah. So up 19% for the year. And now if you invested $100 in 2010 on July 16th, that would be worth a mere 37 million today.
Just 37 million.
Yeah. We've never seen anything like this.
Yes, the famous pizza box story.
Well, hold that thought.
Oh,
Yeah.
okay. Hold that thought.
Yeah. See, there you go, Randy. You're
I
always one
know.
step
I
ahead.
know. That's right.
Yeah. Anyway, the big news yesterday was that Bitcoin overtook Amazon as the fifth largest asset,
Wow.
hitting 1.16
Oh,
trillion market cap.
2.16. Yeah.
Sorry, thank you.
Yes.
2.16. And that was when Bitcoin was at 109,000. That was,
Oh,
a
yeah.
couple $1,000 ago. Um, anyway, I thought this cartoon was kind of cute. I remember you when you were only this big, says the
Oh,
grandma
man.
to the guy with the crypto shirt.
Yes, yes,
Yeah, this actually should say Bitcoin, not crypto, but that's fine. Those are
yes,
splitting
yes.
hairs there. Anyway, here's the table updated for today when Bitcoin was over 111,000. $2.2 trillion asset class that now is above Amazon and looking at Apple.
Yeah.
Apple's at 3 trillion, Nvidia 3.2 trillion, and Microsoft at almost 3.4 trillion.
What would Newton be saying right now? Look how far Apple has fallen. That's what he would
Mm.
be saying. Yeah.
Well,
Yeah.
Apple has risen very well, but over the long term. But yes, relatively speaking, I suppose the gap is narrowing fast. Now, Bitcoin has gold in its long-term sights at 22 trillion in assets.
22
Okay.
trillion. Yes.
Yeah.
That would be 10x. Yeah.
Yeah.
So then
Uh,
the question becomes, does Tesla get to 22 trillion or does Bitcoin get to 22 trillion first?
Very good question, and that's going to be very fun to watch. You can see Tesla's on this list at the number 11 spot at 1.1 trillion.
Right.
So yes, Randy, I like your line of thinking. I think it is going to be an interesting race.
Yeah. Yes.
Yeah.
Yep. Yep. Well, Dan Ives says that Tesla will be worth the two trillion by the end of the year. He hasn't actually revised his price target back up to 650, but he did say the other day that when Robotaxi breaks, it will be a $2 trillion company.
Great. Yep. I hope he's right. Um, over the long term, I'm confident that he's right.
Yeah,
The near term stuff is a little more fuzzy for me, but we're heading in the right direction.
right.
Yep. And then just because we've talked about this before, MicroStrategy, now called Strategy, now their Bitcoin holdings is about
Oh,
$60 billion,
oh yeah.
which is more than the market cap of 65% of the companies in the S&P 500. Now,
And
not 65% combined, but just 65% of the companies have a market cap less than $60 billion.
got it, got it. Yes, and there's a scramble right now. Quite a few people saying that why hasn't the S&P listed them? Sounds like a familiar problem,
Yeah, Tesla investors will remember that, and the S&P inclusion always came a little bit late.
right?
It will probably eventually come. Coinbase was recently added,
Yeah, yeah.
so that's some Bitcoin slash crypto exposure in the S&P now.
Hmm.
And MicroStrategy or Strategy probably isn't far behind, but it's a different animal, it's a different beast. It
Sure.
may take the S&P committee a little bit longer to include them.
Yeah, they had a lot of trouble figuring out a manufacturing company. That was more difficult.
Yeah, right. Exactly. If they had trouble with that, then it's going to be even more trouble with Strategy. Yeah. And then here's your pizza. By the way, this pizza now, where he spent 10,000 Bitcoin,
Right?
$30 at the time, would now be a $1.1 billion pizza.
1.1 billion. Yeah, okay. Yeah, got it. Yes. It's too bad he didn't.
So
It's too bad he didn't know to put it in plaster of Paris or cover it with plastic or something. The pizza itself would probably have a huge value. Yeah.
it probably wouldn't still be worth 1.1 billion,
No,
but
no,
it would
no.
probably be worth a bit of money. Yeah, isn't that amazing? Talk about regrets. I think if anybody has a massive regret in his life, it might be this.
Yeah.
Hopefully he retained more than 10,000 Bitcoin.
Right.
Haven't checked in with this guy. I don't know what his current status is.
Yeah. Yeah.
But yeah, hope they were delicious pizzas. All right, let's move into something a little bit more serious.
Okay.
Not that Bitcoin's not serious, but this is interesting. I think this is right up your alley, Randy. An interesting observation over the last almost 100 years, 99.3 years, the US stock market has averaged about 7% per year on a real basis after inflation.
Right.
Okay. And that's represented on this chart by the green line, the constant 7%
Okay.
growth line.
Okay.
And the stock market at times is traded above that, and then it trades below, and it always come back to that 7% line,
Hmm.
above and below, and constantly climbed over a century. And now we're trending just a little bit above.
Right.
Okay. So, and here's a bit more detail in terms of the relative nature of this. So we had the roaring 20s where the stock market got way above that 7% compounded growth, came back in the Great Depression, overshot that, went down, recovered. We had World War II and then the post-World War II boom.
Wow.
The market was above that 7% line for quite a while, really a
Hmm.
couple of decades.
Hmm.
People were feeling pretty good. And then
Hmm.
we had the high inflation of the 70s, but knocked things back down again. And then we had the internet boom of the 1990s that took things back up again to inflated levels. That all came back down. And then in more recent years, we've had financial crisis, and then we've had a bump up there I labeled pandemic free money boost,
Hmm.
which is this
Right.
peak sort of right here.
Hmm.
Okay. And then my question with this chart is now, are we going to enter into a new AI age where the economy is able to achieve faster growth and therefore the stock market can also achieve faster growth?
And I think you would want to do slash new golden age via the Trump doctrine.
You could combine it with that if you wish.
Right.
The Trump situation may be a fleeting thing for the next 4 years,
Hmm.
right? Hopefully in
AI
many
is
ways,
not. Yeah.
right? Whereas AI is not. AI is just going to be, it's a building trend. Actually, it's probably going to be exponentially building in the next few years.
Right.
Um, this for me is an interesting question because you would think that unlike some other tech developments, that AI continues to build on itself.
Right.
right? Like the internet certainly had a bunch of sort of knock-on effects,
Right.
but AI just continues to get better and better and better, right? And so this will be interesting to see. Now, we've also identified some potential problems because along with AI, like robotaxi, for example, AI-driven automobiles, we're going to have a decline in the cost of transportation.
Right.
So in some ways, that's very harmful to economic growth because we're taking away money out of the system. But we should also then be able to reapply that in other areas. And historically, whenever we've done that, that's been a positive for the economy, right?
Yes. Yes.
Even though some people are losing their jobs.
Yes. The
The
trans.
challenge with AI is we expect massive job loss over the longer term. So now we're into the situation where, okay, what kind of economic system are we going to have? And it's pretty clear it's going to look different than it does today.
Possibly.
Yeah,
I still have my theories, that humans will find new ways to make a living, and that those new ways of making a living will have to do with the wealth effect for the rest of for the people that are now under 100,000 will live like the people over 100,000 live now. The people under 50,000 will live like the people under 100,
yeah,
so if I am somebody, let's say in my wealth class, I could easily afford massages if I wanted them. I have one of the best massage places in the country at the Mission Inn, just a few miles from my home. I could be down there every week. I could afford that. But if I'm making 60,000 a year, I can't afford to go there ever.
yeah.
But it's the wealth transfer. All of a sudden, if I like massages, I can now do it. And now it may not be at the Mission Inn. It may be my own private robot that's giving me that massage.
Right. Yeah. Yeah, I mean, it's the thing that most of us were living a far better life than Napoleon did, for
Right.
example.
Much better.
Even though he was in fancy palaces, we
Right.
have better food and we live healthier lives, and
Right.
beds are more comfortable and all that stuff, right?
Exactly.
Better plumbing and all that stuff. So it's yeah, that we definitely expect that. But I thought this was an interesting relationship just over the last
I do
century.
too. I think this is one of the best charts you've ever done. I'm really proud of you.
Thank you.
No, I really like it. It's very cool.
Yeah. Okay. Let
And
me share
by
with
the way,
you.
before you move away from it though,
Yeah.
if we look at the chart, the expectation, no, the other one, the expectation would be that this AI boom would at least do what the internet, the post-World War II, and the Roaring Twenties did. So we should at least go up to the 200% level that we were for a year or two or three as this thing really materializes, especially when you have Robotaxi, Optimus, and LLMs and agentic, et cetera, that's going to grow out of the LLMs. You would think we'd at least hit those levels. So then that would suggest that the S&P, at 24 times earnings or something, would not be out over its skis.
Right. Yep. No, good observation. I think that's entirely possible as we start to see some of the effects of this. Yep. Um, okay. Related to this is sometimes you see comments like this from investment folks. And not to pick on Peter Mallouk. I think Peter does a great job. But this chart is very, very deceiving. Okay,
Hmm.
and let me share why. But first of all, I'll discuss what this chart is showing. So he's
Okay.
saying, want to build long-term wealth, be an owner, not a lender, right? Own stocks, not bonds. Stocks are
Okay.
far more likely to double your wealth in any given decade than bonds or cash.
Now we know
And
why the bond market's in such trouble. It's because of Peter.
there you go. We've got your answer. So what Peter is showing here is that stocks, again, he's measuring it since 1928 to 24. So what's that, 96 years?
Right.
Um, that they double using the rule of 72, double about every seven years.
Right.
And bonds, based on their past results, double every 16 years.
Right.
And cash, 3-month T-bills,
Hmm.
double every 22 years.
Hmm.
Okay. Now, I saw this and I immediately thought of this. What this chart is not showing you is several things. For one, it's not showing you the returns after expenses, which is important.
Hmm.
It's not showing returns after taxes, which is also important.
Mhm.
Okay. It's not showing you the results, and more importantly, not showing you the results after inflation.
Yep, true.
And the picture here is it's like the mouse taking a bite of your cheese every day.
Hmm.
And at first it's a nibble and you don't really care and you don't notice. But if that mouse eats a bite of your cheese every single day, the amount of cheese that you have left is going to be a lot less, right? So you have to take into account the
Sure,
mouse eating your cheese.
sure.
Okay. So here's what the chart really looks like.
Okay.
If you take into account inflation. So the blue bars are what Peter had in his chart,
Yep.
7.2, 16, and 22. If you take into account inflation using his data, stocks double about every 10 years,
Mm.
bonds every 40 years,
Wow.
and cash a mere 324 years. It would be a multi-generational family situation where, my great great grandfather left me this cash and it's now doubled. Okay. Again, assuming that past returns are
Yes,
indicative of the future and they're not.
yes,
There's always that caveat.
yes.
Okay. So that's the first message is you always have to consider returns after inflation. If you're not, you could be making a massive mistake thinking that bonds, will get you to the same place that stocks will, just on a smoother ride.
Right.
Maybe, maybe not.
Okay.
Okay? That's one of my messages.
Yep, yep.
All right. While I'm on my high horse, let me stay on my high horse for a minute. Okay? The other thing is this is stocks, by the way. This is actually from 1926
Okay,
through the end of April.
okay,
$1,000 is now worth almost a million in the stock market over these 99.3 years.
okay.
We'll get to celebrate 100 years here soon, Randy. In December,
Yeah,
we can have a
yeah, yeah.
100-year century party for the stock market. Um, the problem is that these average returns that you see where stocks double every 10 years after inflation, you've got to take into account the variability because not everybody's time horizon is 100 years.
Mm.
Okay. If you invested back here and you were still around, that's great. But if you invested here and your time horizon was 5 years, then this wasn't so good.
Right.
Right. And there's been plenty of periods where stocks were down for a good long period of time. And just to make that point home, drill that point home, here are stock returns over 1 year periods. It's
Hmm.
about a 50-50
Hmm.
split between positive or negative in any given 1 year period.
Right.
Okay. Slightly favoring the positives, maybe 54% positive, something like
Right.
that. Here it is over 5 year time periods.
Mhm.
Again, slightly more positive than negative 5 year
Right.
periods.
Right.
Okay. 10 year periods. You think that investing for the long term is 10 years? There are still some 10 year periods in our history where stock returns were negative.
Right.
20 year periods
Ah.
in the United States, none. All were positive.
Huh.
But plenty of them, you had returns lower than that 7% long term average,
Oh, yeah, a lot lower, like 2%,
right?
1%. Yeah.
Yeah. Right. Now, again, positive return after inflation, but not much.
Yeah. Yeah.
So just be careful when you're looking at historical numbers. Now, here's the same thing for bonds. Since 1926, $1,000 in bonds would be worth 6,400 in real terms. Okay, again, it was almost a million for stocks,
Right.
and it's
6,000.
only 6,000 plus for bonds. Okay, and look at this period here, where if you were here and invested, this was a long period of time where you
Yeah.
lost a lot of money in bonds.
Yeah. Yeah.
And you know what? We might be seeing kind of a period like that here. Who knows?
Yeah.
Um, Same charts for bonds. Here are the 1 year returns. We've
Hmm.
just been through the worst bond market
Right.
ever
Right.
for 1 year. 5 years, we're among the worst. We've been
Right.
through bad 5 year periods before. 10 years, pretty bad. 20 years, there have been 20-year periods where you
Wow.
lost money
Yeah.
in bonds.
Yeah.
There's also been 20-year periods where bonds were incredible.
Yes.
Okay. So, all right. And then just to round it out, here's cash. Here's 3 month T-bills.
Mm.
$1,000 in T-bills, 1,368 today. Those people that are going to double their money eventually, right? Here are the 1 year periods, again, very similar to bonds, up and down.
Yeah.
5 year periods, plenty of negative returns. 10-year periods of cash, you lose money over 10 years in cash all the time. And then 20-year periods, that can
Wow.
happen too.
Yeah.
And again, look, recent times since, let's say, 2017, maybe, all the 20-year periods since then, like up to then and then since then, have been negative for cash. Okay. So I'll get off my soapbox now, but I just wanted to give people perspective about just be careful when you look at long-term stock market averages. It's
Sure.
really highly dependent upon your starting point
Hmm.
and the environment that we find ourselves in. So you always have to look at current conditions and say, is it even possible to get anywhere near the historical return on these investments?
So
Is it
that's,
possible to get higher than historical
yeah,
returns based on where
yeah,
we're starting?
yeah.
Yeah.
And my number one takeaway is that the government is probably going to pass this big beautiful budget bill, and in the big beautiful budget bill is this new $1,000 baby. Uh, every newborn baby gets $1,000 put into something like a 401k, and you're looking at a 25-year time horizon because the initial withdrawals can start at 25, and then more withdrawals are possible at age 30. So you're looking at a 25 to 30-year time horizon. It would seem like investing in the S&P would be the only really clever move.
Yeah. No, I think that's a wise strategy or a nice thing to do for every child being born. Start them off with an account, get them used to the idea of investing. I think investing is a very important concept for people to think about. There's a lot of people in this country that don't give it a single thought,
Right.
right? They think Social Security is enough. There's a lot of companies, I hear a lot of complaints from companies that have these great 401ks and hardly anybody's taking advantage of it,
Right. Right. I know.
right? They don't even take the free money. They don't even
Yeah.
take the match,
Yeah. It's crazy.
right? Or when they leave the money, leave the company, they just take all the money out
Yeah. Yeah.
and pay the penalty.
Pay the
And
penalty. Yeah.
yeah, right. I mean, it's just so anything we can do, I think, culturally to kind of get people thinking about investing is helpful.
Yeah. 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 So anyway, that would be my, wisdom for today. Of not financial advice, but if you're going to have a baby and you're going to get that thousand, I guess all kids under 6 or something are going to get that thousand initially, something like that.
There's going to be a few people forging their birth certificates.
Yeah. Okay. So,
Another Doge thing to look at. How many people suddenly are 6 years old?
right. Right. So when we closed our last the part one of this two part series, I was talking. I led with a little or ended with a little teaser about Optimus. On the robo taxi side of things, there's a massive TAM. It is a really really big TAM because that we already know how many cabs there are, how many Ubers, how many Lyfts, how many Waymos. We already know that there's a bunch of disruption that can take place amongst the existing ride hail business. Then there is public transportation that might come over to private transportation or to a robotaxi. And then there's people that might give up driving part-time or give up driving altogether. So there's a TAM that's going to be pretty explosive. But I think that my personal opinion would be that the first mover advantage here is going to be very, very important. And when I say that, not Waymo, not Uber, it's going to be Tesla because they're going to be in all markets at scale
Mm.
before anybody else can possibly get close to their scale. Um, on the other side of the coin, I don't see the same issue with Optimus. That the TAM there, according to Elon, is 27 billion robot or 24 billion, whatever the number is, 3 times the world population. If I cut that in a third and then in another half, and then cut it by another 10, whatever the number, if we're talking about 10 billion, 5 billion, 1 billion of these, we are so far from getting to that number. And so many potential areas where there can be niching of the bots from other companies to only have this limited number of capabilities, or maybe to be a really tall one, or a really short one, or a really skinny one, or whatever, really long arms. I don't know. That I do think that there's going to be a lot of room for a lot of niche companies and still have Tesla sell every one they could possibly manufacture for the next 5 years. How do you think about that?
Well, let's explore that for a bit.
Sure.
Think about other consumer types of consumer products.
Mhm.
The automobile, for one. There's quite a few automobile companies, or there have been over time.
Right.
Many of them didn't survive,
Right.
right? But there's still, I think, a fair number of automobile companies in the world. And what do we have? 1.5 to 2 billion vehicles in the world right now,
Yeah, something like that.
right? So it's a big market. So think
Yes.
about 1.5 to 2 billion Optimus or robots in the world.
That's a good corollary. Yeah.
Right. So from that perspective, you could say, yeah, okay, well, I could easily see 20, 30, 40 different robotics companies.
Yeah.
Okay. Now, up until recently, before Tesla came along, a car is a car and they were kind of all the same and required a human to operate it.
Hmm.
Right. But now we're kind of in the software-defined world. And so think about cell phones. How many global cell phone makers are there?
A few,
I'm
handful.
guessing there's not as many as there are automobile companies.
No, I don't know.
Right? Because it's a software-defined
Right.
thing, and there's advantage of being in a network. All Apple phones connect with all other Apple phones in
Right.
unique ways, and it's just right. It's just better.
Hmm.
So I'm wondering if that is more the model eventually for robots,
Hmm. Hmm. Oh,
is
for
because they're
robots. For robots.
yeah, because they're truly software-defined. Once Tesla is able to manufacture robots in the hundreds of millions.
Hmm. Hmm.
And again, to remind people, Apple is pumping out about 200 million iPhones a year.
Right. And they're number two.
Yeah, right. So let's say Tesla gets to that level. At that point, I'm not sure there's much room for too many competitors. But until then, I think you're right. Because even a robot that costs $90,000 a year is huge value add to
Right.
somebody.
Right.
Huge.
Yeah, but what about the niches? I'm saying I'm saying yeah, a humanoid that exactly duplicates a human, I would agree with you. But a human that is the 10 foot tall and
Yeah.
therefore has additional capabilities could have a niche that's a million units a year or something,
I think that's really interesting, right? Are there niches like that where it's going to make sense to make a humanoid in some different shape that Tesla's not ever going to bother with,
right,
right? A humanoid robot that's got 6 foot long legs or something like that,
right,
right?
right, right.
That can do roofing because it can just,
Stand on the ground and do the
stay
roof.
on the ground and reach on the roof. Um, that's interesting, and I think that'll be interesting to see how that develops. Uh, I suspect that you might be right about some of that. My intuition also says that I think we're going to see that just a regular humanoid robot that's, 5.5 feet or 6 feet
Yeah,
tall
yeah,
is going to be the best at probably 99% of the applications out there.
yeah.
So versatile because roofing isn't just about, reaching high places. There's so many more skills involved in that. And
Mhm.
maybe in that case, the long-legged robot isn't good for that,
Yeah, yeah.
right?
Well, I think that's kind of where I'm driving with the whole idea of niches. So, for instance, a humanoid type robot that can go underwater and stay
Yeah.
underwater for hours. A humanoid robot that can burrow underground. It has the ability, I don't know. You can just go on forever with kind of use cases that might be a large enough category to make sense that doesn't necessarily lend itself to the exact humanoid form.
I think you're right. I think we're going to see an explosion of different robotic forms.
Mhm.
Um, and there's lots of different applications. Certainly, underwater is an interesting one because what advantage really is a humanoid at all in that situation,
Mhm, mhm.
right? Um, yeah, no, I think there'll be plenty of space for some really innovative ideas. But the biggest slice of the market, the 95% of the market value is going to be the
Yes.
humanoid maker.
So from the Tesla point of view, and for us stockholders and the people that are watching this who are Elon centric and probably invested in Tesla stock, it would appear from everything that I can see. So somebody also asked this today on X, and I didn't have as fast an answer as I did on robotaxis. We're a little bit in the dark at this point with regard, there's been some good reporting, especially when Scott was doing a lot of his reporting about all the companies that are involved. But we don't have a lot of day-to-day information from Tesla. We just got some great information yesterday, but it's still, we don't really have in depth or the other companies either to say, okay, where are the moats? Do you have any senses of moats that you think? Well, we have the zero moat again. We have the zero moat being Elon Musk. But
Yep.
other than Elon Musk, are there other kinds, which is not a big, that's a pretty big other.
Right.
But other than Elon Musk, do we have any moats that we can really identify as being impenetrable?
At this stage in the humanoid robotic space, I would say no. I think that there's still a lot of development to be made, and I think that Tesla again showed, what they call a breakthrough in terms of robotic training.
Right.
It's conceivable if Tesla has those breakthroughs that others could as well,
Mhm, mhm.
right? And so it's possible that someone else comes out with something that they can set their robots loose watching YouTube videos, and tomorrow the robot wakes up and it knows how to do everything,
Right.
right? That seems kind of pie in the sky, but I suppose something like that is possible.
Mhm, mhm.
Um, I mean, obviously, it would take a lot of compute to do it. I mean, it's not just, some kid in his garage doing it, right? So we'd probably see it coming. Um,
Yeah, the one that comes to
yeah,
mind, the one that always comes to my mind is Tesla's probably number one position in the world as a manufacturer.
yeah.
Just the ability to manufacture at scale with the highest ROIC of any other manufacturer. That seems to be the biggest moat, I think.
And I think that's going to be absolutely critical.
Right.
Um, it's interesting to me because it seems like once one of the robotic companies comes up with a way of doing it, all the others kind of quickly jump
Yeah.
on it and follow. And they've all got teams of really smart people.
Right.
So I'm not really sure how much of a differentiator that's going to be. I mean,
Mhm.
is Figure AI and Optimus going to be able to play the piano just as well as each other? Probably, right? And everything
Yeah.
else.
Yeah.
Certainly one will lead the other at times,
Mhm,
but
mhm.
in the end, I think we're going to have highly capable robots, and then it's going to totally come down to who can make them at the most cost-effective price
Right. And the
and
fastest.
the most reliable and all that,
Yeah. Yeah. All right.
right?
Well, I just thought I'd throw that out because again, it was asked today on X, and I commonly think I know a lot about these subjects that we have on here, and I was like, wait a minute, there's not that many clear cut. Now there may be moats that we don't have any idea about. That Colossus data center and the XAI data center up in Memphis, that combination, according to Brian Wong, that combination is going to put Tesla and XAI like Starlink compared to all the others, compared to Google and OpenAI and DeepSeek and all the rest is just going to blow those people away. And as he says, by brute force,
Yeah.
because again, the manufacturing capability is going to give us 1 million GPUs when these guys are still struggling to have 100,000 GPUs. So maybe that will be a moat that just the ability to train and to do the inference will be so much greater than anybody else's that will be a moat that's a little hard to see right now.
Yeah, and I think that Brian's observation in that regard is underappreciated by a lot of people.
No kidding.
So kudos to him for, I think, unearthing that and discussing that. I think that's really important. Um, I would sort of add though that I fully expect over time that it's possible that the amount of compute may not matter as much in the long term.
Mhm. Yeah.
Right. It matters a lot today, and it matters for the foreseeable future. And the companies that get the most compute in place the quickest probably will benefit
Mhm. Mhm.
and put themselves in that position that you're speaking of where no one can hope to catch them.
Right.
But I kind of also expect, more breakthroughs in AI that suddenly we figure out how to train things, on far less compute.
Yeah. Yeah.
Perhaps,
Right.
perhaps not.
Mhm. Mhm.
Certainly, the cost of compute's going to go down, and the scale of compute's going to go up
Mhm.
by huge factors. They're talking about, a million times, right? And that may well be necessary forever. But there's a part of me that sort of says, well, maybe not. Maybe we'll come up with some other breakthroughs that reduce the need for that.
Right.
I don't know. It's too early to tell.
Okay, last subject. You brought up bonds, and I said when you were going over the bonds that I really wanted to pick your brain more on the bonds subject. I've been saying for over a year, probably a year and a half now, that bonds are controlling everything. The 10-year is controlling everything. That the Fed is almost irrelevant compared to the bond market and has been for that period. The Fed would come in and be relevant for 3 months, and then they would lose all relevance again compared to the bond market. And that the Fed seems incapable of moving the real interest rate, which is being set by the 10-year. What I put out a list of ways that I thought the president could right now. Let me preface it with one more thought. 7 years ago, Trump says there's nothing I can do about the oil market. The oil market's the oil market. And then a few weeks later, he did all these things that completely, the oil price plummeted down to the 50s because he was able to use the bully pulpit and other techniques that I think he didn't even know he could use, but he figured it out. So I put up a list the other day of the things I think he could be doing right now for the bond market. I'm curious to get your take, but also your take just in general outside of what I'm saying. I'm saying he should call on the patriotism of all Americans and especially of the billionaires and say, please buy bonds. We need you guys right now to buy bonds. If you don't want me to raise the rates on billionaires' taxes, we need you guys to step up to the plate and buy bonds. So appeal to patriotism, appeal to the billionaire class. Number two, he's just been making all these deals internationally with all these sovereign nations who have these sovereign wealth funds or have their central banks who hold tons and tons of U.S. Dollar of U.S. Bonds. He should go to all of them and say, as part of our deal that we're making right now, I need you to buy bonds. We need to it'll be good for everybody to get these 10 years down under 4%. That would be a number two thing. And number three would be the, I guess, more obvious one. The Treasury Secretary Bessent should do some quantitative easing, at least maybe for a month or two, just something to, I don't know, strike fear into the bond sellers and buyers that he can move and that he could have a big impact if he cared to. What do you think about my ideas? Do you have more? Do you have other ideas about what you think will happen with bonds?
The first one is dead on arrival.
Oh, okay.
I don't think you're going to appeal to billionaires to buy bonds. And let's come back to that at the end because I've got
Okay.
maybe a controversial take on that.
Okay.
The second one, I think about going to our trade partners. If Trump is successful in getting the US to be exporting more, then those foreign countries are going to end up with more US currency anyway, which probably a lot of it gets recycled into bonds.
Mm-hmm.
So I think that part of it will naturally occur. Again, if he's successful in driving up US
Right.
exports.
Right.
And conversely, lessening US imports.
Right.
Whether that happens or not remains to be seen. Um, and I'm sorry, what was the third?
Quantitative,
Your third?
quantitative easing.
Yeah. To me, that's driven a bit more by the Fed and what what they're dealing with, right? And we have all these cross currents now in these different nations, like particularly Japan and what's going on with their bond market.
Right.
right? And the Fed, in terms of their role, in terms of trying to stabilize the global financial
Mhm,
system,
mhm, mhm.
if the yen carry trade is suddenly at risk or whatever crazy thing is going on, you know, uh, to me, that's more in the Fed's hands than it is Treasury. But here's my crazy take.
Okay.
And again, it relates to what we talked about at the beginning of this video and what's happening with Bitcoin.
Okay.
So my view is that we're seeing Bitcoin emerge in the early stages of being an alternative to fiat money all around the world.
Right. Hmm.
And if you are in Venezuela or Lebanon or Zimbabwe, it's clear, get rid of your currency now and buy Bitcoin, right? Get the heck out. But we just went through a whole bunch of charts where even the US dollar doesn't treat you so well if you hold cash,
Right.
right? So here is an alternative monetary, potentially monetary system where you can get out from under the thumb of a government where they can inflate your currency away, and now you gain control of that yourself. And so my view is, and we saw this a little bit yesterday, by the way, with what was going on in Japan
Hmm.
and the US Treasury spiking, Bitcoin went up.
Yep.
Bitcoin was actually showing, instead of being a risk on asset, it was like a risk off asset, right? And it's become, potentially, it will become more and more a flight to safety into Bitcoin rather than just this volatile trading vehicle. And again, I think we're in the super early days of that because the global bond market is enormous, and Bitcoin at 2 trillion is a drop in the bucket
Right. Right.
compared to the 300 plus trillion in bonds,
Right.
right? I mean, it's still a rounding error.
Right. Right.
But in my opinion, the die is cast that we now have an alternative monetary system that's forming. And so to me, eventually the discount rate on stocks, the 10-year treasury won't matter as much.
I see.
If Bitcoin supplants the dollar, right, over time, then what matters more is where Bitcoin is, not where interest rates are.
Hmm.
Now, I'd be the first to say that that's not happening
Years ago.
anytime soon.
Yeah. Years from now. Yeah. Yeah. And
Yeah.
we really need, well, we may not need a solution. I mean, if I want to take the other side of my argument, is if productivity does jump like it looks like it could because
Yeah.
of AI, because of the Trump tax bill, because of the way Trump is reorganizing the world economy, it may be that productivity takes a huge leap in the second half, or maybe it's the fourth quarter, first quarter next year, and then the bonds will drop anyway. If we have that kind of a
Yes.
productivity leap, the bonds will come down. So it may not matter as much, but I was just trying to think of, the again, using the oil example, how the
Yeah.
president and the Treasury, because he can't depend on Powell, how the president and the Treasury might be able to combine to give it a little shock, give a shock to the system that might
Well,
be,
we're gonna get two shocks, right? From the productivity side
yes, mhm,
and then from the deflationary side,
right,
right? With AI and
right,
autonomous vehicles
right,
and
mhm,
humanoid robots and
right,
so on. So the question is, how quickly does that kick in?
right,
Some people feel that it's going to start to kick in pretty quickly,
right. Yeah,
right?
I'm thinking fourth quarter. I mean, maybe third. We saw some numbers this morning that didn't have anything to do with productivity, but we saw some numbers this morning from the S&P manufacturing and services or numbers showed the economy's doing great. People are onshoring. They are. There was another report from Axios saying that 9 out of 10 U.S. manufacturing companies are bringing up uh, production onshore.
Yeah. So we're kind of in this messy middle right now. Like again, the longer term trends to me seem like they're firmly in place.
Right.
We're going to get deflation from technology, right? We're going to get productivity. Those are a dream,
Yeah.
right? And so that takes the inflationary pressure off. It
Mhm.
takes interest rate pressure off.
Mhm.
It allows the market to inflate, like we were just discussing in terms of are we in a new AI age?
Right. Right.
Well, you get bond yields down to next to nothing, and suddenly stocks will inflate a lot just on that,
Mhm, mhm.
right? And so we just may be a little bit ahead of ourselves here in terms of the timing, but I think it's coming.
Yeah. Yeah. All right. Okay. Well, I wanted to get your take. I'm encouraged. I'm extremely optimistic as always, but I think we're in an optimistic period.
Well, it's better to be an optimist than a pessimist.
Oh, that's
Uh,
100%.
yeah, it's just a better place to live. But we always do need to watch out for some of the risks, and of course, the world's full of risks.
Yes.
Um, but I prefer to be an optimist.
There you go. 100%. CERN, as always, thank you a bunch and for those of you who didn't see part one, what's wrong with you? Go back and check out part one. There's the card. Sir, I appreciate you so much. All right. And to all of you out there, it's been great talking to you.
Thanks, Randy.